I am Josh Malancuk, President and CEO of JM Tax Advocates. I'm here to talk today about how to qualify manufacturers for COVID property tax relief by managing to avoid unexpected property tax increases in these uncertain times. So especially during these times, it's important not to forget about property taxes. Doing so may create some unexpected surprises with property tax increases that otherwise could be avoided by a sound planning strategy. And so the first example here highlights what we see as a potential issue to be aware of, in that tax rates may be uncertain and possibly rise for many jurisdictions throughout the United States. So this example highlights the impact of a pure property tax rate change for such things like increased debt interest payments, police, fire funding, school funding for e-learning programs, and all of these costs that are likely to roll into the property tax levy as part of determining the property tax bills for business and residential property owners. And so in this example, you've got an assessment that has just remained steady since 2018. You're seeing a $15 million assessment. The tax bill amount, which was based upon a 2.3% rate, is showing $345,000 in property taxes due for that year. They're humming along, no change in 19. And then in 2020, there's a big increase. But yet my assessment has not increased. So why is that? Well, it's because the property tax rate went up by 30% to fund all of these extraordinary programs as part of the overall levy. And so in this case, the taxpayer has likely received a tax bill and missed their protest period to act any change and mitigate some of that increase with an assessment value appeal. And so now they're faced with a $105,000 increase in annual property tax amounts with no recourse. So we want to avoid that. And so there's kind of a perfect storm in that while tax rates could go up for many property owners, during business decline, there may be warranted a substantial property tax reduction related to recessionary impact on market value for many property types, because we're seeing winners and losers with COVID. And so the impact has really varied with some property types being greatly impacted and others not so much. And so it's important to measure revenue utilization, occupancy, and other trends of costs for doing business to determine whether there should be a COVID adjustment on your property tax assessment. And so, because if you don't, and you don't monitor the assessment and create your own independent analysis, you could likely overpay by as much as 50 to 70% for your property type if you're not taking advantage of appealing and monitoring the assessments and building your case with local and state assessing officials, because they're not going to do that analysis for you. You have to bring that forward, likely with starting with a protest and then several hearings to exact relief. So how do we evaluate whether COVID property tax valuation adjustments are warranted? Well, with manufacturers, that answer can differ. And so, an important criteria that I like to evaluate is a 5-year sales revenue history. What major expenses are being incurred on my profit and loss statement, and what are the 5-year trends for those items, and are there any additional costs that are folding into my expense line items that I haven't seen over the past 5 years? How is my manufacturing utilization going, and how has that trended out? What am I doing with my workforce and headcount? Have I seen layoffs, hours worked decline, those types of metrics? And then the last one, which can have a tremendous impact on manufacturers these days, is what is the impact on my supply chain? And so, are my supply chain suppliers delivering on time? Am I incurring costs because they can't? Are they raising their costs for their component parts, which is squeezing my profit margins down for my property? And so a lot of those symptoms can indicate that COVID relief is warranted. And so, from a macro level, many statistics that we've seen would indicate that a large percentage of manufacturers expect that the pandemic will have a dramatic impact in their business. As we talked about, there can be expenses that can impact the operating income. What is happening with my demand? Am I having to shut down for periods of time? And how has that impacted my utilization with production? And so, those are some trends that we expect will increase the need to evaluate COVID adjustments here. And so, and then, the supply disruptions could perpetuate depending on how we restore and recover from this recession. So for manufacturers, what we suggest as part of a second step after you've evaluated kind of the metric side of things with sales, utilization, expenses, and so on, is to actually build a business case for assessment reduction. And so there's some qualitative and quantitative aspects to that are really important to highlight as part of building your case for a loss on value. And so in general, common appraisal methods apply for both real and personal property. And so, some compelling ways that we've used to measure valuation adjustments for economic obsolescence, which would apply for COVID, would be in utility, looking at expense trends, sales revenue, and hours worked and headcount history. All of those kind of work to build that case for relief. And so, as we talked about earlier, the opportunity cost for evaluating property tax relief, is projected to go up because of just the pure tax rate changes that are likely to occur with many jurisdictions in the United States. And so I think it's also important to look at kind of the magnitude with some of the examples that we've seen with why you would want to look at property taxes, especially these days. So the first has to do with a tier 1 automotive manufacturer, and their property taxes and their management of property taxes were improved greatly, and they benefited by $7.1 million through a comprehensive review of their operating locations. The second one had to do with a statewide initiative for a number of operations for a food manufacturer. And that initiative saved them about $1.7 million by just evaluating assessments that were flat. There was no change historically from prior years. And so they not only saw some relief in the 7 digits, but also an ongoing savings of $400,000. So that should be a gift that keeps giving. And then the personal property tax assessments of a heavy industrial manufacturer were reviewed, saving them $1 million. And so again, that $1 million is expected to perpetuate. And so that relief will continue to grow over time. So we talked about some ways how to capture COVID, the qualitative, the quantitative aspects, kind of some compelling examples of why you would want to go about the exercise of reviewing property taxes for your company. But the last point, and if all you do is take away from this discussion, this very concept, I've done my job. You want to bring in the experience because the impact on the message, the credibility of your arguments, and having that experience with the local and state level administrative appeal process will make all the difference between gaining meaningful relief and relief that may be much less than what you could gain with an experienced navigator. And so it's always a good idea to bring in the experience with tax appeals, because that advocacy typically falls well outside of the role of a typical accountant. It's also important to start early. Most of the protest periods start around the second quarter, around April of each year. And so starting 6 to 9 months out will allow you as a company to plan resources, possibly procure appraisals ahead of protest periods, and make a run at settling any appeal differences ahead of the county and state board hearings themselves. The other concept that is very important is to know your deadline. You know, missing your protest deadlines will basically disqualify you for much of the relief that could be gained by meeting the deadlines, possibly eliminating any contention for relief for that year altogether. And so knowing your deadlines, acting ahead of the deadlines, and knowing what the appeal process looks like will help you gain access to relief that you otherwise could not attain. And then really kind of fundamental and central to any effective appeal strategy is creating a credible, correct, and equitable assessment analysis so that you're having a more effective negotiation and discussion with your local and state assessors. And as I said, leveraging your experience can pay big dividends in the end with magnified tax savings. So now that we've talked about COVID relief, I just want to extend an offer to meet with you to talk through your specific situation with a free consultation review. We've listed our contact information, and so feel free to reach out. We'd welcome the chance to learn about your business and to help implement your COVID property tax relief plan this year.
Find out why leading companies trust JM Tax Advocates to bring their property taxes back to reality. Get your free evaluation today.